I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend and someone who was on the front line of providing information that you need to know so you can act appropriately to take the appropriate precautions. And this is why my guest, Craig Hemke, is so, loved, supported, liked at a minimum by those that value freedom and liberty and transparency and accountability. It is also the same reason why he is so despised by what I call the globalist cult. You can call it criminal national banking syndicate, New World Order crowd, globalist syndicate, globalist elite. I don't like to use the word elite, but they're truly a cult because they truly are adverse to people being educated, empowered, and informed. And that's what Craig has done. Now, Craig's journey is very interesting. Craig started out as a licensed security professional. And he was in that position for almost 20 years. And Craig came to a realization very similar to what I came to in my career in medicine. Look, I can either keep going down this path, or I can forge a new path that's, it's not going to be easy, of exposing the underbelly of the industry I was involved in. And Craig took the harder path. And every single person in our country and frankly the world should be grateful for him for doing that. And he retired from his licensed security professional position, and he ventured out and founded the best financial website on the internet, tfmetalsreport.com. Craig did this in 2010. Now, I can tell you when Craig ventured that path, there were a lot of naysayers who said, well, this is nice, but this isn't going to last. And it has not only lasted, but it has thrived. Why? Because the information you get on Craig's site is not only what the bought-off lamestream fake media, tentacle the deep state, does not want you to know. It puts you ahead of the curve that they have constructed that ends in a brick wall with the shattering of your freedoms, including your financial well-being. He created a site that is a community like no other, with a lot of give and take going on. I encourage you to go to tfmetalsreport.com. It is my honor to welcome back to our platform our friend, Craig Hemke. Craig, welcome back to the Insider Insight Show and the Operation Freedom platform.
Oh, my friend, thank you so much. You're so kind in your words. I'd like you just to keep going. But you're very that's very kind of you to offer such effusive praise. I appreciate it. It has been quite a journey. It says on my site, and you use the term the licensed securities professional. What does that mean? I was a stockbroker. Had all my, you have to take a bunch of exams, and know all your financial products and all that kind of stuff before you can become one. 30 some odd years ago, I passed those tests, and I worked for insurance companies. I worked for mutual fund companies. And, my eyes were opened after the financial crisis as to, it's like the metaphor of the red pill, blue pill is obviously getting tired and abused. But it's like once you take it and the curtain is pulled back and you begin to go down these rabbit holes of understanding what's really going on, that there's really no going back. I mean, it's like, okay, now I got to learn more about this, I guess. Loosely, I describe it as like a financial political complex, the way President Eisenhower described the military industrial complex. And there's really a media arm of that as well, because the media protects and promotes those actors within the financial complex and within the political complex. And the three of them all kind of feed off each other and protect each other. Why? Because it's about the money. I mean, like anything else, they're always going to work to protect their nest as much as they can, which is why when you sit back and you say, well, why isn't the media talking about this? I can't believe it. Well, because in the bigger picture, it affects their power. And so anyway, so once you start figuring that out and you start seeing how these markets work to that end, you can't unsee it. And that's what we've been railing against now for a dozen years at my website.
One of the primetime players in this fraud in the financial markets is obviously the banking industry, in particular an entity called J.P. Morgan. And you mentioned the media. One of our regular guests on Operation Freedom is Helen Chapman, who is an incredible litigator, who was one of the litigators who brought down Bernie Madoff. Helen was doing an interview with Maria Bartiromo. And as she was doing this live interview, Maria turns to her and says, "So, Helen, what are you working on now?" She goes, "What I'm working on is the work and the relationship of J.P. Morgan Chase with Bernie Madoff and how they were aware for many, many years of his money laundering activity and not only covered it up, but actually benefited by billions of dollars." And Maria said, "I'm sorry, Helen, we have to go to an emergency commercial." And when that occurred, Craig, two guys in black suits came out. Helen's a very petite woman. The camera goes to this emergency commercial, and they pick her up underneath each one of her elbows and lift her out of the chair and take her out of the studio.
Oh, my gosh.
Okay. The next week, Maria Bartiromo had an interview with the CEO, Jamie Dimon. And none of this came up, of course.
No.
Just what a wonderful person he is. I bring that up because of the following. This hit the other day. J.P. Morgan, same J.P. Morgan Chase, sued by Virgin Islands over Jeffrey Epstein's alleged sex trafficking operation. The U.S. Virgin Islands is suing J.P. Morgan Chase for allegedly reaping financial benefits from Jeffrey Epstein's pedophile sex trafficking operation and failing to report suspicious banking activity for years.
Yeah.
This is who we're dealing with. This is who is undermining the financial freedom of every person of the world.
Right. And why does Maria Bartiromo not want to talk about it? Well, one, her guest is coming on in a week. He's going to cancel. That might hurt her ratings. Two, if you say something sideways about J.P. Morgan, I'm sure they're an advertiser or a sponsor or whatever, right. On the channel. So we can't have that either. And three, it cuts at the entire underbelly of the corrupt system, where these banks are they benefit from the public largesse constantly being bailed out, but at the same time are not at all responsible and are never held to account. I mean, there's still nobody has been prosecuted or even perp walked for everything that took place 15 years ago. Now, J.P. Morgan has been fined literally billions of dollars. I think the total now is up to $5 or $6 billion, and the company has been actually convicted of felony accounts. But again, it's a specious thing of the company. It's not individuals. Now, there have been some individuals that have been convicted and are awaiting sentencing for overt precious metal market manipulation. The head of J.P. Morgan's global precious metal trading, a guy by the name of Michael Nowak, had been their head from 2008 through, well, really till the point that he was forced to resign when he was indicted and then convicted. He was convicted after a Department of Justice investigation. He and now 5 other people at J.P. Morgan that worked for him have been convicted and are awaiting sentencing. But Jamie Dimon, who oversees all of this, of course, is touted as maybe a potential future presidential candidate, Dave.
Yeah, imagine that.
Give me a break. And again, the insidious relationship of these actors, and I'm not saying there's people that are acting. I'm just saying the actors in the combination, the media, financial, political complex, and it's this loop where they all support each other. And again, why you look at, and again, I just use this because I know this is often a subject on your show, but you look at the overwhelming evidence now that this COVID jab does more harm than good. I mean, unless you are over 80 years old and you have all these pre-existing conditions and all that kind of stuff, you have more risk, personal health risk. But the data actually now proves it.
Mm-hmm.
You have more risk of an adverse health effect from getting the shot than you do from getting COVID.
Mm-hmm.
But there's no interest in any discussion of this.
No.
You would think this would be a big story, right? You would
One
think
would
in
think.
independent media, this would be something like, whoa, wow, we should probably look into this. But then you look and you see how many, programs and news programs are sponsored by Pfizer.
You can't go 5 minutes without seeing a big pharma ad in the bought-off lamestream fake media.
Right. And then it reflects onto the media, or on the politicians as well.
Mm-hmm.
Well, you're the politician that failed to grill, the experts and all this kind of stuff. So maybe we should discuss whether you are worthy of office. Whoa, no, now you can't affect the political power either. So they all cover up for each other. And it's this, like I said, it's their nest. They make money off it. They have their power from it. And they're not going to do anything, any of those three components that weakens their access to power and money. And that's why you got to continue to fight. That's why I've got to continue to fight, as exhausting as it is. And will we eventually have an impact? Let's hope so.
Well, Craig, when we look from an economic standpoint, for several years, you put out the fact that we are headed into currently a stagflationary environment.
Mm-hmm.
You were derided for that. You were demonized for that. You were ridiculed for saying that. But recent data. U.S. PMI scream recession in December,
Yep.
right? So anything less than 50 is considered, trouble. Manufacturer PMI, 46.
Mm-hmm.
U.S. services PMI, 44. Mm-hmm. U.S. retail sales tumble. Philadelphia Fed admits that they overstated the number of U.S. jobs and you've pointed this out, you call it the BLS, right? Bureau of Labor Statistics bullshit,
yes.
Right? Mm-hmm. Overstated by at least 1.1 million jobs, right? Rather than creating 1.1 to 500 million jobs, right? It was actually 10,500 new jobs.
Yeah.
Okay. U.S. retail sales tumble. Then we had this. An interesting column by ex-Fed official Kakalakota saying the Fed is actually aiming for stagflation.
Right.
What's uncertain is, quote, how much stagflation is the central bank willing to tolerate? This is a crucial policy question that the Fed needs to answer publicly. Craig, you brought this up years ago, putting people ahead of the curve, and you were derided for saying this. That they're now saying, yeah, we're in stagflation. Yeah, that's what we want. Okay, Craig. Let's talk about current data. Let's talk about where we are and where we're headed with the economy in our country and around the world.
All right, you're going to have to help me out here because there's so many things there that have to be addressed.
Yeah.
Okay. And unless there's just one thing that you'd like me to focus on.
Your dealer's choice. Your choice.
If I have a look of despair on my face for everybody watching, it's because it's such a despairable thing, if that's a word, in total. The illusion is put forth, and has been put forth now for decades, of economic prosperity and low inflation. Mm-hmm. Because in the current global monetary system, there has to be demand for dollars and there has to be demand for U.S. Treasury bonds. With the debt exploding now, from 5 trillion to 10 trillion to 30 trillion, that's all debt. That's all debt that the current bonds come due and have to be resold. Mm-hmm. Right? Mm-hmm. And then there's new, $1 trillion new every year that's got to be financed. Mm-hmm. And we've already seen the interest cost just this year alone has doubled on the federal budget from about $400 billion up to $800 billion because rates have gone up. Well, if you're going to keep this Ponzi going, mm-hmm. which is what it is, right? What's a Ponzi scheme? You mentioned Madoff, right? You take money from new investors and give it to old investors. If you're going to keep that going, then you've got to keep this illusion up of low inflation so that people are willing to only accept 2 or 3% interest. Well, if inflation's only 1 or 2%, then okay, I'm fine with 3 because I'm, net a real return. And in growth, right? So getting back to the PLSBS, the jobs number, you see it all year long. There has been this gap between what's reported as the total. Oh, it's 8:30 on the first Friday of each month, and you're told, oh, the U.S. job market created 350,000 new jobs last month. Mm-hmm. Biden comes out, yay, and all the cheerleaders, the media, which want to play along, mm-hmm. It helps their powers and and keeps the markets afloat or whatever. Well, why? How can that be? Well, there's 2 surveys with mm-hmm. It's all statistical guesswork, but they do a little bit of surveying the middle week of each month, where they phone calls and all that kind of stuff to businesses and to households. So there's a business survey called the Establishment Survey, and there's a household survey, and the numbers don't match.
No, they're not even close.
What's going on, and why was this million job overstatement? In the end, the most simplest way to look at it is, Dave, you have a job, a good paying job up in Michigan, where you make whatever $60,000 a year. Okay, that's more than the median income in the U.S. Mm-hmm. It's a good job. You get laid off, fired, whatever. You still got a family to feed. Mm-hmm. So what do? You go out, you deliver pizzas at night. You work at Amazon during the day, and you tend bar on the weekends. Mm-hmm. Okay, so you were making $5,000 a month with your good-paying job, and now you're making $4,000 a month
with 3 jobs.
Just trying to make ends meet.
Yeah, with that's 3 part-time
deal.
jobs. Yeah.
That's a bad deal for you.
Right.
But the Bureau of Labor Statistics says that's 3 new jobs, 1 lost job. That's a net gain of 2 jobs.
Right.
What? But again, there's no curiosity. There's no truthful reporting of this. It's just, 350,000 new jobs. Back to the stagflation thing. This was an obvious end result of all the COVID stuff, because mm-hmm. you knew, if you just thought about it, 2 years ago, we started talking about this on my site, summer of 2020, when this was all had just happened. We said, ultimately, this is going to result in stagflation. Why? Because companies are going to slim down. They're never going to rehire all of the people that they hire. What are you talking about? They have rehired. I heard that on the news. No, it's that 3-for-1 thing I was telling you about. Mm-hmm. If your company figured out that they could get by with 10% less of the workforce, or they could have people work from home half the time, right? Then you're not going to have the same amount of revenue at the corner restaurant, because not everybody's in the office tower. And you got 10% less jobs because you figured everybody else is just going to work harder because they're happy to have a job. But you're printing all this cash. So the stag of the non-existent recovery, the stag of the stagflation, plus the inflation of all the money printed and more dollars chasing, stagnant amount of goods, stagflation. Mm-hmm. So this was obvious. Why would the Fed want stagflation? They need inflation, okay, so that you're constantly growing the money supply. That's what causes the inflation. Mm-hmm. And you're taking new dollars that are more worthless than the dollars 5 years ago, and you're using them to pay off 5 years of the debt from 5 years ago. It's called inflating away the debt, if you want to look at it that way. Mm-hmm. Mm-hmm. And they need the stag part as an excuse to come in and keep buying bonds in quantitative easing as the buyer of last resort, so that you have equal amounts of buyers and sellers and you can keep interest rates low. So I hope that all makes sense to people. I try to condense all this into a 5-minute answer, but that's what's going on in that question you gave me. The Chicago Purchasing Managers Index and the Dallas Fed and the Philly Fed and the Empire State Fed, PMI is Purchasing Managers Index, mm-hmm. and it's a way of measuring economy, whether the economy is growing or contracting month over month. Without getting into the the nuts and bolts of it all, any number over 50 is considered an expanding economy, growing economy. Anytime you see a PMI under 50, it's considered contraction. The Fed's own regional numbers, the Chicago Fed, the Philly Fed, the New York Fed, are all below 40. Mm-hmm. Mm-hmm. Now, the last 8 times that has happened, it has preceded a recession. It's batting 8 for 8. The other indicator of recession is the yield curve. What are the interest rates for a 3-month T-bill versus the interest rates on a 10-year T-note or a 30-year Treasury bond. Mm-hmm. And when the yield on the short end is higher than the long end, that's called an inverted yield curve. That also 8 for 8 in predicting recessions. You know what the Fed is in predicting recessions when they put out their summary of economic projections every 90 days?
A big whopping zero. Yeah, zero.
They're 0 for 8. Why? Because they always have to have these forecasts. This is why it's all just lies.
Right. It's all
They always have to have these forecasts. Oh, yes, we're going to grow 2% next. What are you talking about? So anyway, it all gets back to where we began, Dave. Mm-hmm. It's all this. Again, you can't unsee it once you see it.
Right. That's right.
And then you understand. And then that changes your whole career path, your whole life path, because you're like, I got to tell people about this.
Right.
Because in the end, it's all eventually going to fall in on itself. You can't, here come the metaphor. You can't build a house of cards on sand. Eventually, if you don't have a foundation, it's all built upon lies. You can't lie long enough. We've all known people like that. You tell one lie, now you got to tell 2 lies, and you got to remember the first freaking lie you told so you don't screw up. Eventually,
right.
Now, doesn't mean, we've been talking about this for 10 years, and we haven't yet, but that doesn't mean it's not going to happen. Right. It is going to happen, okay? Mm-hmm. The global monetary reset where, all of a sudden there's competition for the dollar. Mm-hmm. I mean, we've been told, Dave, you and I, for over a decade, that we're just tinfoil hat crazy conspiracy people for thinking that. Just for having the imagination to think outside the box and actually think, consider where all this is ultimately headed. So we just got to keep warning people, as best we can and not figure it, we're just some kind of quixotic adventure where, we're not helping anybody. We just got to keep trying to warn as many people as we can because it, again, that's the actual reality of the situation. Mm-hmm. You got to prepare for reality, not, just simply stick your head in the sand.
Well, let's give our listeners and viewers the benefit of your wisdom and foresight of where you think we're going in 2023. I'm going to mention some categories and give us where you see things happening. Let's first talk about what 2023 is going to bring us. Let's first talk about paper assets. Okay, let's first talk stocks.
Okay,
where do you think we're headed?
Well, that's always a hard one.
Mm-hmm. Because there's such manipulation in this, as we've discussed.
Yeah, and
smoke and
historically, and even current day, top performing equity markets are ones where you're in this kind of hyperinflation category where cash is just getting printed and it's got to go somewhere, and your investors are just simply trying to find anything that'll keep pace with inflation. Mm-hmm. Weimar Germany had a outstanding stock market. Venezuela as of late, all these places. But in terms of real return, you're barely keeping up with inflation. And so your nominal returns in stocks may continue to be up just because there's so much cash. And, right now the Fed is playing this game again where they're trying to say, oh, no, we're going to keep raising rates and we're going to draw down our balance sheet. And they've played this game off and on now for a dozen years. But that's going to the rug's going to get pulled out from under that again. They're going to be revealed again next year, that they're just lying and that what changed in 2009 is not changing back. And so the stock market, I think it's going to struggle in the first quarter. Mm-hmm. I have thought really since April when Bill Dudley, who used to be the head of the New York Fed, the New York branch, the New York Federal Reserve branch, when he said that it was the Fed's goal to inflict losses and pain on stock and bond investors. That was his words. Inflict pain. Mm-hmm. Mm-hmm. And you better listen to this guy. Mm-hmm. So I've thought all along that the S&P could go down to 3,200, maybe even 3,000. Mm-hmm. It's currently about 3,800. Mm-hmm. It got to 3,500 a couple months ago. I still think that's a possibility. But in the end, fundamentals don't matter. It's not like, your earnings matter. It's just cash. There's just cash everywhere. And once the Fed turns on the printing machine again, which they will, I mean, it's just now whether that keeps up with inflation and that kind of stuff, is a whole other story. So long answer, Dave. I'm sorry. For the stock market, it'll probably be up next year, but it won't be straight up like it had been for a couple of the years recently.
And the stock market is actually a significantly smaller market than the bond market, right? Many people think it's the opposite. They think that the stock market is far greater than the bond market.
Right.
So
right. It's not. Yeah. The
so with
bond
this
market is far more important.
So with this
money, when I say stock market, I'm sorry, Dave.
No, go ahead. So with the money printing and with the Fed, if you will, pivoting. So we're going to see bonds.
Right. Okay. Well, I'll get back. The other thing about the stock market, when we say the stock market, we're talking about all the listed equities on the NASDAQ, and the New York Stock Exchange. It's really like 10 stocks.
Right.
With how they're weighted in the indices. So if you can just get 10 of them to go up, hey, look, the S&P's up this year.
Yeah.
Okay. So that's one thing. And everybody's, all this passive investing in your 401ks and these index funds and these ETFs, just make 10 stocks go up and everything seemed like it's okay. The bond market, though, is far more important because the whole system is based on debt. The dollar itself is an instrument of debt. And if you're going to keep the system going, you got to keep that debt Ponzi keeping going. And we've had a horrible year. 2022 was the worst total return year for the bond market, I think, in decades. In some cases, if ever. That's not going to be allowed to continue. If anything, just because I gave you that stat earlier about the most recent federal budget numbers showing that interest on the national debt is actually more like $400 billion a year in the last fiscal year to $750 billion this most recent fiscal year. If interest rates were to keep going up, it'd soon be $1 trillion. Soon you'd be paying more interest annually. The line item on the U.S. budget, which doesn't matter anymore because they just pass omnibus bills and that they don't have to read. And remember that when the budget would be dead on arrival back in the days?
Yeah. Well,
it doesn't matter anymore.
No, forget it. No, there's no budget.
They just tell them what all the different departments want, and they put it all in one big bill that, Rand Paul had those stacks. Doesn't matter. But anyway, the interest is part of that budget, if you want to call it that. It's $750 billion. If it goes to $1 trillion, pretty soon it would exceed. You'd be paying all of your tax revenues, your gross tax receipts, just simply to service the debt. Well, then what happens to the defense budget and the social welfare budget and and all this stuff? So they got to keep that down. The only way you can keep that interest cost down is by keeping interest rates down. And how do you get interest rates down? You got to have buyers of debt. Well, right now, the Bank of Japan's not buying. The Bank of China's not buying. The Bank of Russia's not buying. The ECB's not buying. There are no buyers. And that's why rates have gone up this year.
So the only people to buy are the Fed.
In the end. And so the Fed, because the economy is going into the tank already bad, going to get worse. So those PMIs are telling you. But also because someone has to be the buyer of last resort. The Fed will be the buyer of last resort. And so first thing that's going to happen is this shift of perception, which I think is already happening, which is why the precious metals have been rallying and the dollar's been falling since November. But then eventually you get the actual policy change too. And so at least for gold and silver, next year is going to look a lot like the previous two times that this has happened. Entering 2010, we were told the Fed's not going to do QE anymore and that rates are going to keep going up. By November of 2010, the Fed did QE2, and rates started falling again. And everybody, if you were in the precious metals, you know what happened in 2011. 4 years ago, in 2018, stock market was tanking. Everybody was saying the Fed 10-year note was already over 3%. All these fancy Wall Street economists were saying it was going to go to 5%. The Fed was going to keep hiking all through 19. Instead, they started pausing because the data was so bad in early 2019. And by June of 19, they started cutting. And the Fed and the metals had a tremendous year. And then with all the COVID stuff, took off in 2020 as well. That's what this next year is going to be like. The economic data is going to be so bad that it's going to become clear that the Fed isn't going to keep hiking and that they're going to have to start cutting. And by the time we get to June, either they'll already be cutting or they'll be talking about cutting by September. And again, just like 2010 and 2019, the precious metals will anticipate that even in the futures markets, and prices will begin to soar again. I'm 100% certain of that. The only question is the timing of it all, but it's definitely going to happen again.
And Craig, one of the benefits of what you do at tfmetalsreport.com is your analytical abilities to looking behind the curtain of how the banks are lining up with the bullion banks. The banksters are lining up in their positions. Now, many people will say, well, the banksters are just going to keep manipulating gold and silver till the cows come home, and their positions today are the same positions they've held for years, if not decades. Is that in fact true?
Well, here's what's interesting, Doc. This is actually being discussed now a little bit in actual mainstream investment banking. There's a cat by the name of Zoltan Posar who works for Credit Suisse, and he has been widely respected for several years as primarily just a short-term bond market analyst. And he would cover, like the real nuts and bolts, of the ins and outs on a daily and overnight basis. And, they call it the financial plumbing, of the banks and the central banks. And man, whenever Zoltan said anything, oh boy, we better pay attention because things are gumming up again in the system. And it's, it was, anyway, he, beginning earlier this year, let's put it this way, he began to sense a change in the whole global financial system. He calls it a move toward a new Bretton Woods, a new global monetary paradigm. Bretton Woods being the agreement that was signed in Bretton Woods, New Hampshire? I always get them.
Yes.
Yeah, not Vermont.
No, New Hampshire.
In 1944, setting up the dollar as the world's reserve currency, and the dollar is backed by gold and all that kind of stuff back then. So he says there's going to be a new Bretton Woods, a new reserve currency system that's going to be set up, forced upon the world by all these dollar creditor nations that aren't going to put up with the U.S.'s, ability to control everything anymore. And he's been writing about this all year long, and people are like, wait a second. Because again, it would only be lunatics like you and I that talked about this stuff.
Right.
So there's this growing revelation now that we're actually headed that way. And that's going to become more prevalent next year as well. More and more people are going to be talking about this kind of stuff, this de-dollarization, you might call it. And that's going to be a big driver of things as well. But Doc, what was your original question? Because I've lost the bit on your original question, because there was another point I wanted to make.
Well, where we were headed in 2023 as it relates to with the gold and silver issues, because the banksters have held. Many people are saying the banksters are in the same position they have been for decades. They're going to keep manipulating. There's no change. And I said, is that actually
okay? Thank you.
So
on to that point of Posar, the banks. We tracked silver, and we knew this year silver wasn't going down any further, because if you look at the internal reports from the government agency, the Commodity Futures Trading Commission, positions that are surveyed every week, you could see that some of the banks were actually long silver, and it was the hedge funds that were short back in the fall. It was like, well, the banks never lose the bank trading desk, so silver price is likely to go up, and it's gone up from $17.50 to $24 in the last 90 days. Okay, so you can actually kind of figure this out if you watch. Well, the banks are always short gold.
Right.
And as Posar writes, and other people have followed on in the last month, the reason they're always short gold is they know it's never going to be remonetized. That's what they're banking on.
Pun intended. Yeah.
So anytime price goes up, they just go in and short it and short it and short it. Leverage. Okay, they don't actually own the gold. They just go in and they take the short side of these futures trades, knowing they can force the speculators there on the long side back out, and they make a ton of money, and they've always made a ton. That's why they continue to do it. Okay, and so there are far more obligations for gold through these futures contracts than there is actual gold. And so the words that Posar, this Zoltan Posar, used in his most recent thing that came out last week of December, was he called it not only a systemic risk, but an existential threat to the monetary system. All of what the word is rehypothecation, leverage of the actual physical metal to the system. If there are 100 claims to the same 1 ounce of gold, then there's 99 people that think they own gold that don't. And if that leverage is forced to unwind, well then, I mean, it's calamitous. That's the existential threat. And if gold gets remonetized by these countries that are, quote unquote, adversarial to the U.S., the BRICS, China and the Russia and the Brazil and the India and the Iran and the whatever, then that may force an unwind of all this leverage, this rehypothecation, and that forces that's just a destruction of all of these banks that manage the price and profit from managing the price. So anyway, long answer to your original question. Mm-hmm. Will the banks continue to do this? You would sure think that understanding the long-term picture would preclude their rush for short-term profits, right? You'd think somebody would step in and go, well, wait a second, we may not want to get caught on the short end of this anymore if this is the direction this is going. They're still playing those games. They're still playing those games as we speak. The question is, will they continue to play those games into 2023 and 2024 if they too perceive this existential threat of a systemic risk to their institution by being short metal they don't have, if all of a sudden the world reverts back to some type of, or at least offers an alternative to the just paper money dollar system. We'll see. I'll give you one more thing, Doc. I've told a lot of people in the last month, you do these year-end review kind of interviews and stuff, and you watch and CNN, they're the 10 most important events of 2022, all that kind of stuff, and everybody talks about the war and all this.
It was a financial event.
We're going to look back.
Yeah, March.
5 years from now, 10 years from now, it's March. Exactly right. We're going to look back. The first weekend of March was the most important financial event, not only of 2022, but probably of the last 50 years.
Yeah.
And what happened? It was 2 weeks after Russia invaded Ukraine, and the U.S., as a in punishment, and trying to get them to stop, did two things. They stole for large,
No, absolutely. Right.
Russia's foreign currency reserves that were held outside of Russia. Russia had about $400 billion held outside of Russia. And the reason they did that was, well, if there's any other kind of conflict, at least we can service our debt with this money, Well, anyway, the U.S. and NATO, and the ECB just stole it. They froze it. Then they kicked Russia out of the SWIFT system, which is the global international payment system. Those two things happened that first weekend of March. And that was the most eye-opening nail in the coffin, though, too, of the dollar-based system. Other countries went, whoa, wait a second. So you're telling me if we do something, we don't toe the line, we don't do exactly what the U.S. wants, they're going to freeze us out? They're going to steal our money and freeze us out? Well, we can't always, it's not always in our best interest to do what the U.S. wants. So we better come up with our own system so we can pursue our own interests and not at the risk of the U.S. kicking us out of their system. And that's what all of this DDoL, that's what Zoltan Posar figured out back in March. That's why he's been writing about it for the last 9 months. And that will be looked back upon, eventually when the foundation is laid, whether it's next year that it's revealed or the year after that or whatever. We're now inexorably down this path where there's going to be another alternative that's offered to the U.S.-based, U.S.-centric dollar system. And when that happens, again, I don't know if it's going to be next year, the following year, but it's going to happen. When that happens, that changes everything, and nobody is prepared. I mean, there are people listening to this going, what is this guy even talking about? Because nobody can remember what it was like, pre-Bretton Woods in 1944 when the dollar wasn't the basis.
And that's what they're counting on.
And that's what's coming back. And that's what ultimately that's what we have to prepare for. Like I said, they could announce something like that over a weekend. I just don't know when, that's going to be. We just know it is definitely coming because it's in the interest of all those other countries to do it. And that first weekend of March, and I can understand, why Biden administration and NATO and the ECB all thought they had this to it. We're going to show them. Okay, I can understand why they tried to do it and why they did it. But we'll look back on that in the years to come. That was the biggest event of the year.
Well, and in fact, and maybe I'm wrong on this, Greg, but Zoltan Posner has some very interesting background and ties. It's my understanding that he actually worked at the New York Fed, which is the central bank of central banks, right?
Yeah.
And we also know that the syndicate, they all see all of us as taking a shower, and they're going to flush the toilet.
Yeah.
And they're going to give us a warning that they're going to flush the toilet. And the ones that, hey, the people that are smart enough to figure this out, they're going to kind of get out of the shower and they'll be okay. But the ones that are still in the shower, well, that's it.
Yeah.
They always give us a warning.
Yeah.
And I believe Zoltan Posner, who has done remarkably great work, I believe he has, if you will, been allowed to say this as, hey, we're flushing the toilet. Much like Terry Duffy, the head of the Chicago Mercantile Exchange, 5-6 years ago, with that dweeb Neil Cavuto on Fox Business Non-News, is out there saying, someday you're going to wake up. And the price of gold. Now, this Chicago Mercantile Exchange has actively been involved in the criminal manipulation of the price of gold and silver. Someday you're going to wake up and the price of gold, you're not going to believe it.
Yeah. He said that.
Right?
Yeah. And Posar, again, now works for Credit Suisse, right? Switzerland-based bank, second biggest one in Switzerland. And their stock has gone from $50 down to $3, right? Assets are leaving there like crazy. People don't know if they're going to survive. So then you have to kind of wonder, okay, why is this guy from Credit Suisse all of a sudden talking about this stuff?
Right.
Is it just is it a warning? Who knows exactly what his motivations are? Maybe it's just as simple as he sees it now, like you and I have seen it for a decade. Maybe. Either way, you're right. There are we can't be the only people who have figured this out, Doc. There are people with billions and trillions of dollars involved that have a vested interest in getting ahead of it too, which gets back to your original question. Will the banks, which have profitably controlled and managed the price of gold now for decades, will they kind of get out of that business? Well, we'll watch. Like I said, that's what I do every week. We'll do another report every Friday about the positioning, if you can trust it, of these banks in the futures market. And we'll watch to see how aggressively they move back in to provide short. They take the short end of the contracts to the speculators going long and provide those contracts by taking the short end. And we'll watch to see how aggressively they do it the next time gold rallies and silver rallies. Because if they don't, it's really going to get interesting fast. It won't take this great, breakdown and reset to make it change. So, anyway.
I want to end our conversation, Craig, on the issue of store of value. We have continually been told by syndicate players that precious metals, gold, silver, platinum, palladium, are not a store of value.
Right.
We've also been told by a different community, if you will, that if you really want a store of value, the store of value are cryptocurrencies. Okay?
Yeah.
So, Craig, in 2023, and a year from now, we look back on this, and we go, that was a store of value. That one, not so much.
Yeah.
What are we going to say?
Let's answer this one outside of the context of the corruption of the system and the system breaking down. Let's answer this one that we get to the end of 2023 and the markets all kind of still look and operate the same as they do now. I own Bitcoin. I never have owned Ether or any of the other.
Ethereum, Tether.
I owned a little Litecoin for a while and made a profit at that. Then I understood what it was all about. And whatever.
Yeah.
I own Bitcoin, still own some Bitcoin, and a little hard wallet thing. It's about this big, so it's not on an exchange. Bitcoin, nobody could figure out. Bitcoin has taken this logical progression path higher since it started, in part because the amount that can be mined gets cut in half every 4 years. Okay, so you've got constantly decreasing supply with constantly increasing demand and awareness. How does that not work? That's why I originally bought it in 2016 at about $600 a Bitcoin. Well, that worked until it didn't. Well, why did that suddenly break? Because that chart would have Bitcoin over $100,000 by now per. And instead, it's a tenth of that. Well, demand for Bitcoin got siphoned off into all this other crapola, the Sam Bankman-Fried stuff. That was all just a scam.
Right.
Complete scam. Ponzi schemes.
Right.
And these Sam Bankman-Fried and Binance and all these other firms created their own little token, And then they all made a market and supported the price so then they could loan it out and do all. It was all a massive scam. And demand, and people that didn't understand that, went into crypto and not Bitcoin. And it all went into crypto and Bitcoin and not gold. So what's going to happen the next time the Fed turns on the printers? Well, no one's going to fall for this crypto crap. Well, at least you shouldn't. God, if you fall for it the second time, shame on you, right?
Right.
So all of that now, this excess demand, the next time, the money supply is soaring again, when the QE starts again, is actually going to benefit Bitcoin. And it's going to benefit gold in all its forms, whether it's futures or ETFs or whatever. And so even if, when you get back, so this is I conflate Bitcoin with a sound asset as opposed to a paper asset, but I think you get the idea, and I think most everybody understands. It's something outside the financial system. That's what they have in common. The next rush, with the money printers on, the money supply, got to go someplace, is going to kind of make up for what had not been a rush in 2020 because it got siphoned off into these scams, frauds. Okay. Next time, they're not going to have all these other alternatives. No. And it's going to be even more money into a smaller pool of assets. And then, so even under, like I said, the current system, if everything kind of looks and feels the same way it does, at the end of 2023 as it does when 2023 begins, you've got that potential, I think, alternative investments, if you want to call gold that, outside of the accepted, banker system, I think are going to really, really benefit this next time around when the printers go back on.
Craig, educate our listeners on how they can become a member of the TFMR community and how they can benefit from your expertise that you provide on a daily basis.
Well, here's the thing, Doc. You and I were laughing as we were getting caught up before we recorded about the bags under my eyes and the wrinkles and the gray hair. I always call it like dog years. Like 1 year following the precious metals is like takes 3 years off your life. Or like, remember in The Princess Bride when poor Wesley is strapped to the machine?
Right.
I'm sucking life. Christopher Guest.
Yeah, I remember.
I just sucked a full year of your life away.
Yes.
That's me. I think of me as Wesley on that rack. Just getting the life sucked out of me by following this stuff. And it's because, you can be a stock trader, and offer stock advice. And you kind of got to watch other things, but really you're just watching one thing. If you're going to follow the precious metals, as I think is evidenced by our discussion, you got to follow freaking everything.
Right. You do.
Geopolitics, macroeconomics, regular old politics. I mean, you got to watch everything every day. So what I tell people on my site, if you're interested in this sector, and God, you better, everybody should be for your financial well-being, as you say. It's almost impossible to do. If you're out there working your job and managing your life and caring for your parents and worrying about your kids and all, you can't keep it. So that's my job. You pay me $15 a month to do that for you. And then I write up a report every morning about what's going on in the world. I record a podcast every afternoon to tell you, what took place and what we're watching and all that kind of stuff. And you can use that information to your advantage. Like I said, at the bottom, this is a great example. 90 days ago, I mentioned how silver was down at $18. We knew it wasn't going for any lower.
Well, but there were people saying it was going to 12, Craig.
Right.
Right?
But there was what the banks are going to lose $6 on every ounce that they're long?
No.
Not a freaking chance.
No.
And so what do we do? $6 higher. So for the people on my site that understood that and were listening to me, and say they just even bought one tube of silver eagles, or one tube of, that's a bad example because of the premiums on those things. But you bought 20 ounces of silver.
Right.
You saved $120.
There you go.
Okay, well, that's damn near a whole year of, what I charge people for this stuff.
Right.
So anyway, I think it's worth it. And I think, boys, we head into this next year.
Oh, absolutely.
And Dave, I tell you one last thing. We haven't even talked about this because people on my side have been all over this for a couple of years too. One of the biggest risks of next year is the same risk that we talked about last year at this time. And that's a societal risk.
Right.
And that's if you're going to have a functioning society that's not anarchy, there's got to be trust. not only in the media, but in your government, in your doctor, and you got to trust people that in the end they're telling you the truth.
Mm-hmm.
And I remember last year at this time talking to you and others saying, one of the biggest risks, if it comes out, if it gets learned by this critical mass of population, that these COVID shot mandates, and go out and get the shot, go get your booster 10 times, and all, if it gets understood by a critical mass, whatever that is, majority of the population, that has done more harm than good.
Mm-hmm.
That Aunt Betsy got her booster and then she crapped out 3 days later from a stroke. And the people figure those two things were directly related. Mm-hmm. Wait a second, you killed Aunt Betsy.
Mm-hmm.
I believed you.
Mm-hmm.
If we get to that critical mass,
mm-hmm.
I didn't know if that would happen in 2022. We were kind of ahead of the game. You and I understanding, that these are not good deals. If we get to a point where the majority or whatever actionable majority of the population understands that, I mean, talk about an epical, mm-hmm. EPOCHAL
mm-hmm.
change in government and society, and it could really, in this internet age of everybody learning everything at once, could really unravel things and lead us down paths that who knows where it leads. And so I just wanted to throw that in as well, because I know a lot of your listeners are aware of, again, you have a greater health risk now of getting the shot than you do of getting, a risk from COVID.
And one of the big game changers this year on that front was Elon Musk not only buying Twitter, but actually opening up at least some of the files.
Dave, and getting back to that nest, that media, political, financial mm-hmm. complex. Mm-hmm. That should be the number one story on every newscast.
Absolutely.
This is how government agencies mm-hmm. like the FBI mm-hmm. and CIA were actually actively working with these companies to suppress mm-hmm. speech, mm-hmm. censor speech, and promote a certain view. That should have set every journalist in the world, especially in the U.S., their hair on fire. We got to get to the bottom of this. And yet there's scant coverage, which, again, if anything, shows you and demonstrates for the people listening to us the insidious, all-controlling nature of that media, financial, political complex. Mm-hmm. It's that inactivity, that lack of attention being paid to this. Mm-hmm. And so, again, if we get to that point where you, me, our neighbor, our friends, everybody that you come across is talking about, hey, wait a second, I know somebody, mm-hmm. Aunt Betsy or my mm-hmm. neighbor, mm-hmm. man, he was feeling fine. Then all of a sudden he got an aortic aneurysm and dropped dead. I thought maybe it was just natural, but now we're reading studies that, that's a side effect. I think it could really get sideways. And
I agree.
That's probably all part of why they're trying so hard to suppress it, right? Because they got to maintain their power. But
anyway, one thing my dad always taught me, who was the best financial analyst I ever met in my life, never dealt with. He always said, when things go sideways, even you, when things go sideways, you mentioned the word sideways. He used to say, when things go sideways, always remember, the single most effective way to protect yourself financially is with things you can hold or stand on.
Right.
One of his favorite was sideways. And when you mentioned that, it clicked in again. And here we are. Because I really believe, Craig, I know for a fact that there are things Elon Musk, based on some people I know, of what's coming, he is going to if he lets 20% out of what he currently is holding the cards, it goes sideways. And that's why our discussion today is so important.
Yeah.
It is so important. I believe, Craig, the things you and I discussed today, people will look back in a year and go, holy cow.
Yeah.
When was this? What? At the end of 2022? Are you sure this wasn't the end of 2023 these guys were talking?
Yeah.
I truly believe that. And Craig, I thank you. I thank you for not only having the analytical ability to put people ahead of the curve, but for having, and I truly am very sincere about this, the courage to speak about it. Because all too often, and I see this in medicine all the time, and it drives me insane, there are people that know what's happening, what's gonna happen, and they keep it to themselves.
Yeah.
They don't step up and say, look, I know this is contrary to what you're being told. I know this is not, quote, politically correct. I know this is not, but this is where you need to know where I'm seeing things going and happening and have evidence in that regard. And I thank you, Craig, for having that courage to do that. Because in the process, you save people's lives because you put them ahead of the curve. No, that's not an overstatement. It's true.
Well,
because if you don't have the financial resources, you can't eat.
Yeah.
And you can't keep warm.
Yeah.
Right?
Yeah.
And you can't that's what they're counting on.
Yeah.
They want people hungry.
Right.
They want people starving. They want people cold.
Dependent.
Because they become dependent and fearful.
Yeah.
And I thank you, Craig, for providing a guiding light for people and to keep them out of that fear-based zone that the syndicate wants people in. I thank you for everything you have done, are doing, and will do.
Thanks, Doc. I'll just tag on one last thing that we didn't cover. But you're also going to get more of this central bank digital currency stuff 2023. Yes.
And that's something to be avoided. The plague. Like a jab for the plague.
We've called it over the last several years the war on cash. Mm-hmm. Who needs physical cash? That's only used in illicit things by bookies and drug dealers and stuff. Right. They can eliminate, physical things. Mm-hmm. You become fully dependent upon them. Yes. Like the Chinese, right? Yes. That's what the Chinese government has done. That's right. And we've got to rail against that going forward too, because like you said, and like your father said, the only things that you really own are those things that you can touch and hold. This ground I'm sitting on, my house, the physical metal that I have in storage, the paper stuff, even your paper bank account. The bank doesn't have all your cash just sitting in a vault.
Nope.
Right? It's all just zeros and ones.
Right.
Show up. You got $50,000 in a savings account. Go to your bank today and ask to withdraw it all. See what happens.
Good luck.
So that's all. Again, these are all things we have to be very, very diligent about in the year ahead, and we'll do our best.
Craig, I'd like to thank you for everything you have done, are doing, and will do. I encourage folks, tfmetalsreport.com, tfmetalsreport.com. It's the single greatest move you can make for yourself and your family this coming year. I thank you for joining us today. Until next time, Dave Janda signing off. Dream big and dare to fail. Thanks for your time today.